Hello, everybody. I hope you guys are having a fantastic day. A lot of you guys have been asking for an update video about Ginkgo Bioworks. The stock ticker symbol is DNA. And in today's video, I'm going to do exactly that. Some people are like, Adam, are you still bullish? Why are you not covering it? Why are you not putting out videos? Because in the end of the day, there's nothing really good that's going on with Ginkgo Bioworks except you're looking for the future. The earnings absolutely freaking bombed. We were downgraded from a $10.50 price point to a $6 price point by Raymond James, and we have another dilution of $100 million worth of shares with an additional option of diluting for another $15 million worth of shares. Currently, the market cap of Ginkgo Bioworks is at $3.9 billion, and DNA stock is trading just a smidge over $2. I'm going to go over the earnings call right now. However, I'm going to save you a lot of time and a lot of drama and waiting. Do I still hold my Ginkgo Bioworks shares? I absolutely do. Will I be buying more? Not right now because I'm just sitting on cash, but I'm not going to be selling my DNA Ginkgo Bioworks. I sold a lot of stocks. Palantir is one of the stocks that I did not sell. Ginkgo Bioworks is one of the stocks that I did not sell. I'm still in the game. However, there's nothing to write home about. There's nothing amazing that happened in the earnings. And for all intents and purposes, the earnings freaking sucked. And that's why the share prices of Ginkgo Bioworks is dropping more than other companies. And there's reasons why the earnings sucked. With that said, I am still bullish in the long run because, as I said, if you have a 10-year, horizon when it comes to Ginkgo Bioworks, then you got to understand that this is the pick and shovel play of DNA synthetic engineering. And if you believe that DNA synthetic engineering has a place in the future, well, then you have to believe in DNA Ginkgo Bioworks. It's just that freaking simple. I'll go over the earnings right now, and there are some major concerns, like we actually made less revenue, negative revenue, not positive revenue year over year, and that's a concern. There's a reason for it, but that's a freaking huge concern. Let me go over the earnings really, really fast, and then we could talk about this a little bit later. Guys, before I go any further, can you please give me the likes, share, and subscribe? These videos don't do so good, and I am trying to grow the Ginkgo Bioworks DNA community. So take a moment, hit the comments down below, hit the like, share, subscribe, and notification bell. Ginkgo Bioworks programs are growing. It grew to a total of 85 programs. There was only 54 programs last year. So there is growth in total programs. There are 15 new programs in Q3 alone. The major programs, so they have 4 different categories. The 2 major categories was the government and food and agriculture. Government went from 11 programs to 28, and food and agriculture went from 17 to 27. I like to see that because I think that the total addressable market for government is freaking absolutely enormous. And there is a new health task force in President Biden's office, and the former chief business officer, something like that, of Ginkgo Bioworks is at the head of that new program. So there's definitely going to be a lot of connections there. So I definitely like that. The year-to-date biosecurity revenue is 289 million, and cash reserves is 1.3 billion. So that's the main thing. That's a really positive. 1.3 billion in cash reserves. Is Ginkgo Bioworks going to go under? In my opinion, no. Nothing is financial advice, purely entertainment and educational purposes. But is Ginkgo Bioworks in trouble of going under? And my answer is no. In my personal opinion, they are not in trouble of going under. They did 4 acquisitions in Q3. In October alone, the acquisitions was for Circularis, Altar, Drone Bio, and Zemergen. And they announced that they are working with Merck. I covered that in a past video. If you guys want to see it, just click on the link up above. With that said, these acquisitions, there's a lot of money that you're paying for the acquisition. There's dilution of shares, which I mentioned earlier in this video, that maybe $115 million of dilution. At the end of the day, this is very much needed to grow your company. So you can look at these earnings and say, hey, it was really shitty. Or you could say, hey, they're doing exactly what they need to do to be growing. And that's why general and administrative costs, as well as research and development costs, are going up, which I'll go over in just a moment. The costs for these 4 acquisitions will be seen in Q4, so they were not even seen in this quarter. So brace for freaking impact in Q4. If you go year to date, okay, so this is not the entire year. This is 3 quarters over 3 quarters, not the entire year. If you go year to date, biosecurity went from 87 million to 289 million. Foundry went from 79 million to 90 million. And total went from 165 million to 379 million, which is 129% growth. You understand the revenue in the slides that they said 289 million, they don't mention Foundry is only 90 million, right? So their Rolodex, their code is growing significantly more than actual Foundry. And how is Ginkgo Bioworks makes money? Foundry is where they rent out their lab and they rent out their staff, so on and so forth. That is not growing. Their state-of-the-art lab is not growing as fast as their Rolodex, their code. Why? They're increasing government contracts, as I was talking about before. It's really interesting. Total revenue, this is the problem. Total revenue for biosecurity went from 43 million to 42 million. We actually lost $1 million. And Foundry went from 35 million to 25 million. We actually lost 10 million. Now, they're saying this is because we got one lump sum payment in Q3 of last year, like for a deal. But when I did the research, they got a 13 million lump sum payment. So if they got a 13 million lump sum payment and they went from 35 to 25, that's 10 million, and 43 to 41 and 43 to 42, that's another million. That's 11 million. So if they made 13 million lump sum and they're down 11 million, so they would have not been growing that much anyways. And plus, lump sums happen. So that's what they're saying. The reason why they grew 14% negative from a total 78 million to 66 million is because they hit a $13 million lump sum last year. But if you add 13 million to the 66 million, you come up with 79 million. So you would have been growing only 1 million in total. You understand what I mean? That's not good numbers regardless. However, new programs went from 10 to 15, 50% growth, 57% growth in active programs, 54 programs to 85 programs, and 59% increase in total active customers from 27 to 43. So we are growing, and that's what I like to see. However, there's a huge question about our revenue, dilution, stock-based compensation, which I'll get into in just a moment. And all of this is hindering our numbers. That's why we're trading at $2 freaking. We are literally a penny stock. We're a freaking penny stock. Anything trading under $5, consider a penny stock. Biosecurity revenue is also going down, and it's not just from one quarter, right? If you go back to Q3 21, it was 43 million, then it went up to 114 million, then it went up to 147 million, and last quarter was 100 million, but this quarter we only had 42 million. However, our margins are up from 36% last quarter to 41% this quarter, but the quarters before the 36, we were all around 40% margin. So our margins are staying around standard, but our biosecurity revenue is going down, which sucks. Research and development went up 37% from 53 million to 73 million, and general expenses went from 29 million to 59 million, which is an increase of 104%. So there's a shit ton of cost that's happening with running Ginkgo Bioworks, ticker symbol DNA, and that's okay. I don't mind the growth. I mind that the revenue is not coming with the growth. That's a problem. However, I am still bullish over the next 10 years, obviously, because they're spending a shit ton of money to get this done. Net loss was 669 million, and that is from 102 million last year. Of the 669 million, 563 million was from stock-based compensation. EBITDA loss was 70 million, which is up from 18 million last quarter, or an increase of 287%. This is a really big effing number. A really big effing number, and there definitely is a problem. Total revenue was revised 4 times. These are the revisions that I'll be talking about. On the 28th of March, their total revenue projections was 325 million to 340 million. And then they revised this in May 16th to 375 million to 390. Then in August 15th, this is every quarter that they have their earnings. They went to 425 to 440 million. And then right now they increased it to 460 to 480 million, which is really good. However, remember, there's biosecurity code and then there's Foundry. So most of the revisions came from the code biosecurity. Actually, Foundry was the same every quarter, except from last quarter to this quarter, they went from 165 to 180 million estimates to 150 to 170. So they actually slightly decreased their revenue projections for Foundry. Again, their world-class lab that they're renting to people for people to build out on is not growing. And that's a problem. Although we're making money from the biosecurity code, which is fantastic, our foundry is not growing. So if you want that home run play where people are going to come up with that next level cure to something or that next level genomic, bioengineering, you need to have foundry. You need people building in our labs. And if people are not building in our labs, then there is a huge freaking problem. For these reasons, I believe that's why we were downgraded by a lot of analysts. Again, in the future, I'm still bullish. Cathie Wood still buying a shit ton of shares. However, she has not been so hot lately, and it seems that whatever she's touching is going down, down, baby. Guys, I hope you enjoyed this review. Let me know down below what you guys think. Yes, I'm still bullish. However, let's be honest. Let's call a spade a spade. This was an absolutely nightmare of an earnings. This shit absolutely sucked. It was atrocious. I didn't really see anything that I liked. And I think Q4 is going to be really bad too, because there's going to be a shit ton of dilution in shares, which we're seeing right now. With that said, they are growing, they are increasing their customers, they are increasing their footprint, and hopefully in the future, this is going to pan out over the next decade or so. Thank you so much, everybody. Have a great day.